So is the bottom being put in for the markets and for crypto? And is the Fed going to ease up if the economy moves into a recession? Let's take a look and see if we can answer that question. The Fed minutes from the last meeting were released today. And obviously the minutes just said what we already knew based on the meeting and testimony that Powell gave after the meeting. And then following, the Fed board members spoke all last week. And Powell spoke again, reiterating that they see more restrictive policy likely if inflation fails to come down. So it all hinges on the inflation print that we're looking for next week on the 13th. If it comes out hot, the Fed is going to raise 75 basis points. They've already telegraphed that move. They will continue to reaffirm that move. They said likely in July they would see another 50 to 75, depending on, or potentially one percentage point, 100 basis points, or 1 percentage point in discussing potential policy actions at upcoming meetings. Participants continue to anticipate that ongoing increases in the target range for Fed funds rate would be appropriate to achieve the committee's objectives, which their objective is to bring down inflation. So right now, that's what the markets are looking for, is for inflation to come out hot again and for the Fed's response. And markets are just kind of consolidating sideways in anticipation of that move. Bond yields are up a little bit. After those minutes were released, they're trending a little bit higher. And, the market pros track the spread between longer duration treasury yields and short duration treasury yields, with the former typically higher. So, the 10-year is usually higher than the 2-year. When the 2-year goes higher than the 10-year, that is what the yield curve inversion is all about. So the treasury yields pushed higher after the release of the Fed meeting minutes because the documents showed that the central bank was leaning towards another 75-point basis rate hike to get inflation under control. The 10-year treasury yield tends to peak near the peak Fed funds rate of a given cycle. Market expectations point to a 3.3% terminal rate, which is consistent with the peak in the 10-year yields to date. However, softening growth and inflation expectations suggest the 10-year yield near 3% has limited upside and may actually decline in the second half of the year, which obviously is going to keep pressure on the housing market, because if rates go up in treasuries, then mortgage interest rates go up, and that brings prices down and inventory levels up in the housing market. As reported earlier today, mortgage applications were way down again from last month because of rising interest rates, even though the interest rates came down just a little bit the other day. The mortgage applications are still down because rates are still twice as much as they were at their lows. So that's what's kind of going on there. As far as news, a lot of people have been asking about Voyager and the bankruptcy and what's going on with Voyager. And they are entering Chapter 11 bankruptcy. So this, we don't know where this is going to stand. We'll just have to watch day by day to see what happens and what the results of the bankruptcy are. But, typically when something goes into receivership in a bankruptcy, you either have immediate liquidation, which they get what they can get when they liquidate the assets, or it could be tied up for years in a bankruptcy proceeding. And generally the creditors are the first ones in line, and investors are usually some of the last ones to receive anything, if they receive anything at all. So we'll just have to wait and see how that kind of develops. Also, Celsius is kind of reorganizing. They paid down some debt to reduce their liquidation to free up Bitcoin. So the thinking is they're going to liquidate the Bitcoin in order to pay off other creditors and other debts. And they have put some debt restructuring bankruptcy advisors on their board. So we'll just have to watch and see how these things unfold, what kind of pressure that continues to put on the market. So let's take a look at Bitcoin. This is Bitcoin leveling down, as we have been watching over the last few days. This is Bitcoin on the hourly. Let's take a look at the daily here. And again, just kind of consolidating sideways. Of course, this range here looks a lot like this range here before that last drop. So the question is, could Bitcoin be putting a bottom in here? Well, if the Fed was going to ease up and inflation was under control, we could really expect a bottom to be put in for Bitcoin and for the stock markets. But what's happening right now is markets are kind of ranging, waiting for that inflation print. Could be up and down on any given day, depending on what happens over the next week until we get the inflation report. If inflation comes out hot, markets will, trend down, waiting for the Fed meeting. The Fed does its thing based on what it telegraphs, and markets will bounce just like they've been doing on that news, and then continue to either range depending on where things are at that point, or trend, range and trend kind of sideways, or potentially if that's a bottom, it could consolidate for a while and then start, looking for the next leg up. But the real question is, like for Bitcoin and for crypto, here's Ethereum on the daily, kind of doing the same thing, just really unwinding. There's a lot of different on-chain metrics we looked at the other day that are kind of pointing to a bottom right here. Some of them are saying, pointing towards a little bit more downside before a bottom. So somewhere in that 12.5 to 14.5 range ultimately. The question is, could this be a bottom right here? Potentially. And one of the thinking is, if recession is a concern, will the Fed ease up or even reverse to avoid a recession? Well, what the Fed has to do is they have to get inflation down. They reiterated it multiple times in the meeting, after the meeting, and now with the release of the minutes, and they're going to continue on that path because they have got to get inflation under control. They have to get it down. Basically, they have to cut it in half from where it is. The only way to do that is to destroy demand. The softest landing that they're talking about is this right here, ranging down, in the markets, is that softish landing versus a crash. So, the Fed has to destroy demand. They want to destroy demand. They want Americans to feel less wealthy, meaning destroying values in house prices, destroying asset prices in a controlled, leveled down manner, right? So level after level after level, bringing asset prices down, bringing housing prices down, bringing asset prices down in the markets and in Bitcoin and crypto, so that people will feel less wealthy. They'll spend less money, which eases pressure up on the economy. So that's kind of what's going on there in terms of the Fed. What they have to do to bring inflation down is they have to destroy demand so people spend less money, so manufacturers stop producing. What they're trying to avoid is a deep recession where you get mass layoffs, companies closing, going out of business, things like that, which happened during the pandemic. That was a forced shutdown. That was a panic capitulation right there. What we're seeing here is a steady unwinding of the markets. Now, the real question is, can we avoid a deep recession? And so far, so good, right? The labor market is still pretty healthy. There's, twice as many jobs. The report today was there are twice as many jobs as there are people looking for work based on the labor report today. The job market is still red hot despite recession fears as the great resignation continues. So people are still feeling okay. There's still plenty of jobs out there. So we don't have to worry about an employment issue. So it looks like the Fed still has plenty of runway to go to bring these rates down, to get this inflation down, to keep rates going up, to bring inflation down. So to think that they're going to pivot or change course anytime soon, or that inflation is going to be under control anytime soon, just isn't the realistic likelihood and probability. So what the Fed has to do is they have to continue to destroy demand, continue to fight inflation, get that down, and then maybe they can reverse course, next year, first, second, third quarter. We'll just have to see. The other thing is the thinking that everything is priced in, right? Recession is priced in. Recession can't be priced in, because what recession is massive job loss, companies closing. Companies now are reporting earnings this week, so we're waiting on earnings. The markets are kind of ranging, waiting on earnings. So once we see earnings come out, then we'll have an understanding of where companies are in terms of their current earnings and what the guidance is looking forward. And that's how recession gets priced in, is based on earnings, reports, and then guidance going forward. So right now they haven't reported, so the markets can't price that in because they don't know what to expect. And again, it's just level after level, kind of like we've been seeing here. So this price action looks a lot like this price action here, where, the next leg down is being prepared. If this were a bottom, then, a lot of people are looking for an immediate reversal. You could get a nice little bounce here into the 24,000 range, but, between now and next week. But what's more likely is that whatever is done will be undone, and ready for the next move down, unless, somehow Bitcoin and crypto can kind of hang on right here. But there's, more contagion in the space out there. There's more miners that are going to need to sell. There's a lot more things going on behind the scenes that we don't even know about yet that are going to pop up. So we'll just have to wait and see how things unfold over the next week. Keep an eye on the inflation report, the Fed response, and recessionary fears and effects on companies in earnings as they come out. So these are the things I'm looking at. I'll see you in the next video.